Cancelled property listings are increasing across the Greater Toronto Area at a rapid rate. What is the reason and how was the real estate market in July and what do we foresee for real estate market in the future? That is what we are going to discuss in this video, so stay tuned. Hello, this is Sonia, your local realtor with Remax Realty Specialist. Increase in the number of terminated or cancelled listing is an evidence that Canada's biggest housing market is slowing after more than a decade of rapid growth. For homeowners, it is well within their right to terminate their listing if they no longer want to sell or if the contract between them and the listing agent expires before an offer is accepted. Terminated real estate listings are less predictable. Whether a homeowner decides they no longer want to sell or contract between seller and listing agent expires, it can sometimes be years before a terminated listing reappears in the market. One thing is clear, sellers are not getting the offers they want. Many sellers are still operating under the impression that this is a seller's market, so they are listing too high and not seeing any action. At the same time, rising inflation and rising interest rates are making buyers feel uncertain about the path of the market, which is causing them to be more conservative with their bids. In this uncertain climate, most sellers who have terminated their listings are waiting for a better time to relist or have shrewdly decided to lease their properties instead. Some sellers, however, will relist sooner rather than later, and therein lies an opportunity. In a cooling market, it is fairly common to see a listing get terminated and then relisted a day or two later with an adjusted price. This usually signals a couple of things to buyers. One, there is some wiggle room in the price that the seller is willing to accept, and number two, the seller likely needs or wants to sell in the current market. The new price of a promptly relisted property often depends on whether an offer date is involved. If the seller is still going with an offer date, the new price will usually be lower than the previous one to attract buyers' interest. If there is no offer date, the price typically increases because the seller is going with the price they wanted in the first place. Either way, the relisting will make the seller's intention a lot more transparent and give buyers a better hand at negotiating. It also fuels buyers' confidence. An uptick in more terminated listing is when we typically see more negotiations and lowball offers. At that point, buyers know they have the upper hand in the market. And now let's talk about the shifting markets and the shifting strategies. With the GTA market shifting to favor buyers, it's becoming increasingly important for sellers to get the price right from the get-go. Adding that, sellers who must part ways with a property may need to lower their expectation to make it happen. The full effects of 100 basis points in July move won't be felt fully as people can lock in rates up to 3 months in some cases prior to buying. And overall, rate hikes and rate drops don't show up fully in the overall economy for 12 to 18 months. The rate hikes they are doing now aren't for today. It is for next year's. So the full brunt of these increases is still a ways away. Depending on what part of the GTA we are talking about, good parts of GTA we are now seeing 3 up to 4 months of month-to-month price declines, and we think that this is probably just the beginning. The next hike is on September 7th, and I would say the next hike is going to be 50 basis points. And now let's talk about the Toronto real estate market for the month of July. There have been clear signs that home prices are set for a downward trend in the Greater Toronto Area as rising interest rates knock more would-be buyer out of the market. Overall, GTA average home price saw just 1.2 year-over-year growth in July, the smallest annual uptick since April 2020. However, unlike previous months, those declines are now being felt in the market segment that has been known for its resiliency and red-hot demand. Detached home prices have tumbled below where they were 1 year ago. In the first year-over-year declines recorded since the earliest COVID-induced lockdowns, GTA house prices dipped 3.1% from July 2021 to an average of $1,362,598. That follows a 46.2% annual plummet in sales with just 2,203 transactions. Compared to just 1 month ago, sales and prices are down 26% and 6.3% respectively. From the market peak in February, house values have declined by more than 500,000, which is decline of 24%. It is a sharp turnaround from the rampant price growth experienced in the segment over the last 2 years, as pandemic buyer psychology fueled demand for larger home types, especially in markets outside of the city cores. Just 6 months ago, home prices had shot up 31% annually, rivaling the kind of red-hot conditions that prompted policymakers to implement market cooling measures in late 2016. High-priced Toronto houses see deepest declines. It would appear that eroded affordability is hitting Toronto-based home buyers the hardest. Detached prices in the city property are down by 7.3%, though still sit at a hefty 1,515,762, with sales down 46.9%. Compared to February, when the average exceeded 2 million mark, Toronto house prices have a solid whopping 558,226, which is 26% down. A large chunk, a difference of 221,250, has been lost in the last month alone. Declines are still steep, though slightly less pronounced in the 905 markets. Prices have dropped 1.9% to $1,320,269, down by $407,694 from February, which is 23.5% down. Month over month, they are down 3%. Sales in the suburban and ex-urban markets are down by 46.9%. In a release showcasing the July numbers, the board acknowledges the strongest price growth has been concentrated in the most affordable market areas, condo sales, while still absorbing a year-over-year decline of 47.5%, saw a price jump of 6.9% to $719,273. Less expensive home types, including condo apartments, experience stronger rates of price growth as more buyers turn to these segments to help mitigate the impact of higher borrowing costs. In the 905, condo prices surged the most, up by 11.9% to $659,820. However, low-rise housing types continue to be the most popular in the suburban and ex-urban markets. 402 condos sold compared to 726 detached, 297 semis, and 616 townhouses. As per Toronto Real Estate Board, steeper borrowing costs have greatly reduced how much mortgage today's home buyer can qualify for, while they simultaneously grapple with a higher cost of living due to soaring inflation. With significant increase to lending rates in a short period, there has been a shift in consumer sentiments, not market fundamentals. With the benefit of hindsight, it appears that the Bank of Canada's rate increases started too late. Now we are dealing with oversized increase to curb high inflation. The federal government must enact measures which will assist buyers facing affordability challenges in an inflationary environment where costs are rising at the gas pumps, grocery stores, and everywhere in between. In my personal opinion, prices are still gonna go down with another rate increase in September. Word of caution, be very, very careful when making any decision regarding the real estate. Nobody has the crystal ball, but you should play your numbers very, very safe. Thanks for watching, and don't forget to join me next week. Until then, stay happy and stay safe.